Hello traders, Gary Wagner here, about 10:15 in Honolulu, 4:15 in New York on Tuesday, October 27th, 2015, and this is the daily report for gold and silver. As we await some word from the current FOMC meeting, which got underway today, we'll get some sort of an announcement on the interest rates tomorrow. But as we await that, we do have the precious metals fairly quiet on the day, 1166 and change, putting it up about $3 to $4 when we look at spot gold, COMEX gold. Of course, same price, up about 50 cents on the day, low 60.50, high 68.80. We are trading more near the highs than the lows, but nonetheless, a very quiet day and in essence unchanged. Silver trading higher on the day, actually, a decent performance, up about 1/3 to 0.5% on the day, or 7 cents. 1588, that is our current print. In terms of critical levels that we are looking at, and we'll do that through a weekly chart, but approximately 1570, that is a 38% retracement, and it's a retracement from a fairly large retracement area, meaning 1850 down to really $14. So when we do that, 38 comes in at 1570, and that's the level that I believe is critical to hold. Now, on a technical basis, when we do look at this level, 1570, we can see times in which it provided absolute support, such as this bottom here back in April. However, if we look back into March of this year, we'll see that it did absolutely trade into and then out of this particular price point. So it's rather a loose area, but 1570 is the area we do want to see silver hold. Now, in terms of key levels that we do want to take a look at in gold, we've got two major levels in terms of support, 1161.89 and 1156. First, we'll look at 1156. Now, 1156 to me is a key or fairly critical number, because what we're looking at is, in essence, the rally which began roughly at 700 all the way up to 1900. Substantial rally. That was the dynamics that took gold prices to a historical high. When we plot that out, a 61% retracement of that particular price point, that's what comes in at 1156, and that's why that is so very important, in the same way that this very, very long retracement, which really takes us back, and we'll have to let some data points fill in, but really takes us back to around $300 per ounce all the way up to the record high, and that comes in roughly at 1092, 1090 in that area, and it quite eloquently tracked the absolute bottom of the market, and that's where I believe we had a washout or a termination of this long downtrend that was so prevalent for so many years, 2013, 2014, 2015, into our current state of affairs, really up until roughly May, when we hit these bottoms here. So that's the primary number that we want to look at. The second number that we want to look at is a much more short-term study. And to best illustrate that particular fib retracement in the areas that it covers, I've gone ahead and pulled up a daily chart. When we consider what we have seen this year, this is the onset or beginning of 2015. Market bottom November, really, of 2014, when it trades at around 1140. And up until that point, those were the record lows since the price drop to this area from 1900 over a period of years. We start the year off with a tremendous rally, and that's the upper level of this particular fib retracement. So it covers the high of the year as well as the lows of the year at around 1071. And when we put these two parameters in, we get our basic fib retracement sequence and the important numbers that we want to follow and look at. And when we do that, 1161 comes in at a 38% retracement. That is really, as far as I'm concerned, key support right now, and resistance has to stand at this 50% retracement point, which comes in at 1189, which really gives us a good sense for where these tops really found resistance and then backed off, this being our corrective period from 1190 down to 1160. Now, when we look above that price point for other levels of resistance, of course, as I said, 1189, that's key resistance right now. Just above that is 1200 to 1217. That is the 61% retracement from this total price move here. So that's the levels that we would want to watch. So the real question is, and we've talked about this, we know that we're in a corrective stage. Will the market hold? Because this is a prior top in the market right in this area. You can see that top here. That was our prior high in the market. I believe that came in at around 70. Market comes down, does make a higher low, which is really good. However, did not make a higher high, but that was part and parcel of this entire wave that came in. 1, 2, 3, this being 4, and then I believe we'll get a fifth wave. I think that the fifth wave will take us above 1190 and really look to challenge these highs up at around 1271. However, the key is this support level going to hold? And we'll get a real good sense for that over the next couple of days as the Fed comes out and really lets us know whether or not interest rates are likely to be raised this year. And based upon statements that are said on the upcoming FOMC meeting, which is underway today, but of course we'll get some news from it tomorrow. If it is favorable, if it is dovish, then we could see this market genuinely take off from this price point and move back towards this 50% area at 1189. We want to watch this very closely. We are flat in the market, but if we get a solid indication of some upward momentum based upon statements made, we would recommend entering from the long side. If not, we'll probably go through some sort of an ABC correction as we've talked about, although we haven't seen it as of yet. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Wednesday. Bye-bye.